Today, we're going to cover three things: key traps in live trading and coaching. Number two is where you should focus, and a checklist of good ideas. Back to our trading system, we're going to focus on process. This is the process of live trading and coaching and how you should benefit from it. And I've been on both sides of this. I've been on the learning side where I'm trying to watch what's happening and learn other people's strategies. I've been on the coaching side where I've been explaining my strategies to other people. And I've been halfway through when other people have been explaining their strategies. I'm listening and I'm watching other students. So I've had all three different perspectives. And this is a culmination of ideas from all those different perspectives on what I think works, what doesn't work, and where you should focus if you want to continue to improve. The overall thought process is this. This is absolutely essential for you to understand. No two traders trade the same way, as trading must fit to a trader's personality. If you're in your first couple months, maybe first year of trading, you'll say, what do you mean my personality? Just tell me where to buy and sell. Just tell me when to get in and when to get out. I'm going to make money or I'm going to lose money. It's black and white. But over time, you start to realize that other people can take a position right in front of your eyes and you're uncomfortable. Why? Or they won't take a position, but you will, because this is your classic setup. And why? Why can someone else do it and you can't? Or why can you take this position someone else can't? And the reason is trading is so personal. When it comes down to time frames, the size of your position, the tickers you trade. Some people love trading AMD, but they won't touch NVIDIA. And I love NVIDIA and I don't trade AMD. And despite me seeing very clean moves over the last month on AMD and calling them out in advance, seeing them happen, I just prefer NVIDIA. I prefer SMCI and Tesla. I prefer the market and both SPX and ES futures. And that's just a preference thing. And what you'll notice over time is your personality plays a big part in you deciding your strategy. So whenever someone says, hey, just take my strategy and use my strategy, just realize it won't work. You have to be able to understand what they're doing and what you're doing, and then know the differences and continue to improve your own trading style because it fits to your personality. Okay, two key traps to think about. Number one, copy trading is not a long-term solution. Okay, we're building live trading and coaching so you can benefit from some moves, understand what's happening, ask questions, get real-time feedback, because I love doing pre-market, and we prepare and we call out levels, and a lot of these levels get hit on a daily basis, which is great. But sometimes the market, 20 minutes in at 950, the market looks different. It's dropped a fair bit and then it pushed up. Well, what does that mean, right? Or what if we get a little bit of a pop and then a big sell, and the first 20 minutes is a big sell? Well, which levels do I use then? How do I react to that? And then what if there's a V-shaped reversal at noon and it's coming all the way back up? How do we react to that? And there's always more information after the market is open. So that's why we're trying to introduce live trading and coaching so that you can ask questions, you can get real-time feedback. We can start to see some new levels being created during the day and understand how we react to those. And usually the morning prep levels are the plays I will take in the first 20 to 30 minutes. But if I were to take a futures trade at 1 o'clock, it's not dependent on my levels at 9:30 because they are expired by then. So remember, the trap is, if we join live trading and if I'm on or Coach Shah's on or maybe someone else is on, and you might think, I'll just enter when they're entering and I'll exit when they exit and I'll make money every day. It's not a long-term solution, right? So don't get trapped into that. I want you to think about it as learning and growing. Number two is oversizing can be detrimental to your progress. If you're used to trading 10 contracts on Tesla and you join a session and someone else is sharing their perspectives and they think they will come in or come out at a particular time, and you're going to size up to 20 or 30 contracts, it's going to hurt your progress. You're not trained, your mentality is not trained to hold or to stop out based on that size and take a particular type of stop loss or profit level. And in the long run, it just doesn't work. So keep size the same if you're going to be trading and using other people's information when you do it. And this is a sweet spot. Nice diagram on the right side, right? If you're trading too small, if You think, well, I'll just hold, or you're taking boredom trades, or you're just like, okay, let me just test whether this works out. And you enter and you exit quickly, then you enter and you exit again. And if you're careless trading, you're probably too small. You're not being careful enough, and the money doesn't mean much to you. Now, if you find that as soon as you get in a trade, you get scared, it's too stressful. It's like, oh, I think this is going to go up, and you enter and it starts to jitter up and down, and you're like, I don't trust my read. Let me get out quickly. And you're getting very emotional. You're probably trading a little bit too big. And so you have to reduce the size a little bit. And so you want to be in this funny sweet spot, which is, it's not stressful, but it's not boredom. You care, but it's not to the point where you might be shaking, you might be emotional, and you're not doing careless things either. So you're looking at the market, you expect particular types of returns, and your emotions are balanced. This is a sweet spot to find. So the way you find this is look at your trade log. Have you entered in big sizes where you got it really quickly? Or as soon as you see a little bit of green, you're like, oh, I'm good with that, and just get out, right? If you see those, look how big you're trading there, look how small you're trading, and test some numbers in between. I've had some students tell me there's a sweet spot of being balanced and then like just peaceful trading. And that's likely the right size that you're trading. You want to be at this size until you can make money consistently for 2 to 3 weeks. And then you want to tread on this size next. Just on the brink of, you're not too big, but you're on the higher end, where it's just a little bit uncomfortable, but you can hold to the level that you want. When you take a stop loss, you're not happy about it. You're never happy about taking a stop loss, but when you do, it's not hurting your account. You haven't taken a big chunk out of your account. Where you should focus. Focus on consistently learning and improving. That's the focus I want. Coach Sean and I discussed live trading and coaching. I don't believe live trading works in the long run as a copy solution. And that's why it took us some time to think about how we're going to launch this in a meaningful way. But if your focus is on learning and improving, there's a lot to benefit. If you go in thinking, I'm going to make extra money today because I'm on a live call, change that thought process. But if you go in and think, I'm going to give you a checklist on what to do. But if you go in thinking, I'm going to become better because I'm going to have additional perspectives today. And when I walk away, there's something new that I don't do myself that I might notice and learn from today. That's the right perspective. So focus on consistently learning and improving, because that's what's going to make you better on a week-by-week basis. So here's some questions to ask yourself. If you don't understand why, you've lost an opportunity. If you're in a live trade and the market is trading here at the top and you see this go up and they say this is going to go down, they enter here and then they exit here, and you don't know why, you've missed an opportunity. But if you see this trading and they say, hey, I think this is going to be a short, and you say why, and they say, look, this is likely to take out the liquidity up here, which had equal highs before, and generally the market likes to take out equal highs. So I expect at this point, the market is going to go up, take out these equal highs, and then quickly reverse. And at minimum, it should get down to here because that's next zone of liquidity, and there's a chance for it to go further, but I'm going to risk $1 move on ES to get a $5 move to the downside. Well, now you know why. And the why is good because it's repeatable. The next time you see the market do this, 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 and go up, and by the way, Friday afternoon, this was the exact pattern that we saw, and I called this out in one of the chats, equal lows. This is not a long yet. And what happened next? Liquidity grab, and then continue to go up. This, I think, was at the 4992 level, 4993 level, when there was a liquidity grab and then pushed right back up to the 5,000. And those are the thoughts you got to have when you're taking trades is, why am I getting into this trade? Why am I moving in a particular direction? And what can I learn from this to continue to apply as we go forward? Okay, remember the why, the why, the why. When you walk away and you're like, why did I Why did they take that trade? Why did I think that was the right trade to take? This is where you focus, the why. It's the most beautiful part of it, and you walk away being smarter. That's the whole point. Number 2 is ask yourself, what is repeatable? If you learn why, and you can write that down and you can learn it, you can continue to apply that yourself. That's the goal. The goal is not for you to be dependent on anyone else ever. That's the whole goal in trading, is that you have location freedom, you have financial freedom, and you have geographic freedom. You could be traveling in the Europe somewhere, and you turn on your laptop at 9:30 Eastern, at 2:30 o'clock in the afternoon in Europe. You open up your laptop, look around, you see a setup, you take it, you make $20,000, and you put it away, and then you go enjoy your life. That's the goal. So your goal is not to be dependent on anything and anyone. And so ask yourself, what is repeatable? What are you learning from these live sessions and coaching sessions that you can apply to your day-to-day and you can repeat over and over and over? Because that's all trading is. It's continually doing the same thing, same risk tolerance, same strategy over and over, and then learning and improving and refining it and making it just a little bit better. You're not going to move from day trading to swing trading to hopping across different things. You're going to adjust your strategy just a little bit and continue to improve it over time, but it's going to repeat over and over. And the best traders end up figuring out what they like after the first few years, and then they just do that for the rest of their career, slowly, consistently, and then size up over time till when you're comfortable and you can. And number 3 is ask yourself, what does someone else see? And the funniest thing is, I've been on live calls where someone is seeing a long, someone is seeing a short, and I'm seeing no trade, all at the exact same time. And it's funny. But it's great learning experience to see what are people seeing and why, and then just sit back and watch and say, like, what happened? Why did they see that? And nobody is perfect. You'll see Coach Shah is an excellent trader. He'll call out many things in advance, but he will take stop outs for sure. You have to be ready to take stop outs. I have a bunch of trades. I stopped out on NVIDIA on Friday. That trade didn't work, but I had some really nice moves on NVIDIA before that. So no trader is perfect. And you have to see, what does someone else see and why, and then ask, does that help you? And if you don't trade in the first 15 minutes, but these trades are all in the first 15 minutes, that doesn't help you. You want to trade and improve the style that you trade, and you want to use the benefit of the information around you. So keep asking yourself, does that help you? Yes or no? Here's a checklist of good ideas. I drafted this checklist for folks who are thinking about live trading for the last little while. And I think it's important to go through these and then take what you think is most beneficial and apply it. So follow these tips to benefit the most from coaching and live trading. Number 1, think of it as live coaching, not just live trading. Coaching is you're continually improving over time. So number 1 is prepare as if you're trading alone. Don't come expecting the information to be given to you. Prepare like you do every single day. Where are your levels? What are you looking for? What's happening on the weekly time frame? What's happening on the daily? What's happening on the 4-hour? Where will I enter my trade? Where will I exit my trade? Have all that prepared in advance. That's your duty. This will help you make sure you don't have FOMO. And then if you have a no trade zone, I always have a no trade zone. And I always share it with everybody. These are my no trade zones for the different tickers. And then as long as it opens up in that area, there's no trade in that area. Unless it bounces on one side and flips the other way, I generally won't be using that section for a trade. So prepare as if you're trading alone. That's number 1. And then you come prepared. And then if someone says something like, hey, it's a long here, and you're like, it's not what I prepared, then you can question it in your mind. That's the whole goal. You don't take anything blindly, but you question it. And you can go back and say, why? What did they see that I didn't see? Why did I prepare this way? They could be wrong. I could be wrong. And you could be right. We don't know. Nobody knows until after the trading session's done. But you will learn from that 2-3 people saw different things, including you. And after the session's done, say, what could you have seen differently before? That's how you improve. Number 2 is ask questions. Use the question why. Why? Why? Just keep asking why. Every time you ask why, you learn something new. I have 2 young kids and they love this word. And they keep asking this questions over and over again, and they get deeper and deeper and deeper. And sometimes it's frustrating, but it's beneficial for their learning experience. They learn so much. And so you continue to ask why every time. And even when I'm coaching my students and they take a trade, I ask, well, why? Why did you take this trade here? Why did you exit here? Why was your stop loss here? Why was your first target here? Why did you hold? And when you ask why a lot, you'll get answers, and then you can pick and choose whether you like those answers or not. And you will improve no matter what. Okay. Number 3 is constantly analyze your risk and reward. Everyone's risk and reward tolerance is different. Minimum 2 to 1. Don't risk $1 to make less than $2. In reality, you can risk $1 and you're in the trade and it's getting close to $2, but it's at 1.6, and you see something in the market or there's resistance or something's changed. That's fine. You might want to take it off early. That's fine. But if there's no potential for $2, if the potential to make $2 isn't there, don't take the $1 trade. Okay? So constantly analyze your risk and reward. Number 4, ask yourself if this is a trade you could have spotted yourself. This is my favorite tip. Watch as trades are spotted and why, and you'll pick up something and you'll learn. Maybe there's a new strategy that you haven't considered that you'll start to apply. This is the beauty of trading alongside other people. And you'll see other people are asking questions. Coach Shaw might say, hey, this is a short because this is the ICT silver bullet. It's one of the strategies that he uses. You might see a pullback into a fair value gap before a long play that you're going to take. And if you combine that with the 9 EMA, you'll see something new. So ask yourself, could you have spotted this yourself? It's a very important question. And when you combine that with why, you'll start to pick up more small tips. I was trading with someone a little while ago, and there was a short and they were in a long, and I noticed they said there were no red fair value gaps along the leg down, and that gave a much swifter move up on the right hand side. And it was great because I had never thought about it that way. So I learned from other people as well. So every time you're kind of live coaching or live trading with someone else, you will pick up small tips and write these things down. Okay. Hey, Coach Shaw, nice to see you. Number 5, write down new things you learn after each session. There's so much to be learned. Write these things down. Don't lose the ability to take the learnings and apply them into your trade book. But if you join 10 live trading sessions, you're not going to remember what happened in the first 3 or 4 unless you actually record them somewhere. Write it down, take a screenshot, put it in your trade log. So when you go back, especially your big aha moments, you don't have to write down pages and pages of notes like when you were in high school, but the 1 to 2 top lessons. What did you learn from that session that was most important? Write it down and you'll continue to improve. Okay. And then at the end of the week and at the end of the month, review your learnings and incorporate them into your trading. Take the fair value gap concept, which will be discussed a lot. Talk about liquidity, direction, many things around trading ES will be discussed, and you can take these and incorporate them into your live trading and decide if it suits you. Great. The goal is to make you better and improve. And if you don't like something, you don't have to incorporate it because trading is personal. So you have to choose what you like. And then the last piece here I will say is ask yourself on a monthly basis, where have you improved? What are you better at? I had a student who has been doing very well for the last few months and had a very rough kind of blow up trading day on Friday. And he's been diligent with following rules and went, I think it was 6 losses in a row on Friday. It just felt one of these like really long-term blow up days that haven't happened in a long time. and shared his training log and said, hey, this is what happened. And I said, you know what? These things happen. And it's deep inside you as a bad habit, and it's totally fine. And it's happened to many other people before. But the great thing is you didn't blow up your account. You didn't change size, which was really important, but you traded outside of your comfort zone and a little bit emotionally, and he knows it, right? And he knows exactly what he needs to do. And this was one of those mess ups that it's okay. It's good that it's the weekend. You can dust it off and you can settle in and you can say, now I know that this is an area of danger for me and I have to be very careful. And the next thing we're going to do is just recheck his habit list and his rule list to make sure that that doesn't happen again. But can it happen again? Yes. But remember, that's fully in our control. And so if that only happens once over a 2-3 month time period, I'm not worried about it. But if it happens once every 3-4 days, well, it's a big problem we got to fix right away. That's number one, attention. But once out of 2-3 months, we're all human. We're all eligible to make a mistake once in a while. We'll pay the price. We all feel bad, but let's move forward and create constructs so that we can prevent that happening in the future and say, how can we improve going forward for the next month and prevent ourselves from doing that? And then the great thing that he did is he's been seeing a lot of consistency over the last 3-4 weeks and trading the same size, repeatable strategies over and over and over again and feeling more confident about it. So don't let one day out of 22 good days really change your confidence and your impression of yourself. Even if it's a bigger blow up day and you did some things that are emotional, don't let it take you off track, right? Shrug it off and say, I made a mistake. It's no big deal, but that's not me. I am 21 out of these 22 days, not that one day. I am the 21 days, which is 95% of me and how I execute. And yes, I have a little bit of work to do, but keep your focus on something positive.